Hemant Jalan of Indigo Paints is joining us on the show. Mr. Jalan, thank you very much for your time. Good results this time around. Margin expansion, a healthy 20% plus growth on the profit side, and coupled with good management commentary. That's a perfect recipe for investors because the stocks will do well. You have actually maintained that sales in tier 2, tier 3 is likely to grow at a very fast clip. Where are you getting this confidence from, and how much are you likely to capture it in your top line growth, say in the next 4 to 6 quarters?
No, I'm not talking about there being any endemic higher growth in the larger cities versus rural sectors. All I'm saying is that Indigo Paints, until 2 years ago, had not focused on the larger cities. We were happy to focus on the smaller towns in India and engineer our growth based on that. During the last 2 years, we have started specifically focusing on the larger cities, and therefore they are driving our growth much faster than the normal growth that we are getting in the smaller towns. I think overall, as far as paint market sentiment is concerned, it is fairly uniform across all sizes of cities. It is just that for Indigo Paints, for the last 2 years, the growth is slightly higher in the larger cities because our base was much lower. And that is where we continue to focus on for the next few years as we go forward.
I'm very curious to understand how exactly would you navigate the competitive landscape? Because I'm assuming that larger cities would actually see much more deeper penetration or bigger plays from industry leaders who are much larger in size. So what exactly would be your moat? What will be your main edge to fight competitive landscape?
I don't think that the competitive landscape changes very much from the larger cities to the smaller towns. It is a myth that the larger players do not focus on smaller towns. That is simply not correct. They are as focused on smaller towns as they are on larger cities. It's just that the branding requirement to penetrate larger cities is a little higher than what may be required in the smaller towns. So earlier on in our journey, when our brand equity was comparatively less, we chose voluntarily to focus more on the smaller towns. As our brand equity has grown by leaps and bounds over the last few years due to very high focused spending on advertising and promotion, I think our brand pool is now sufficient to attract the dealers and the influencers in the larger cities. And that is what we have been doing with much success.
Mr. Jalan, could you put it out in numbers? Because from what we understand, right now you have about 17,000 paint dealer reach, and you're ranking 5th in terms of market share. Where do you hope to scale it up to, say, in the next 1 year and then by the end of the fiscal 2?
Well, the idea is to grow at a much faster pace than the rest of the industry. The number 1 to number 4 players are significantly larger than us. I do not foresee that we will overtake the number 4 player in a matter of 1 year. It would take a little longer than that. But as long as we grow at a CAGR which is much higher than the leading players, at some point in time, we would start catching up with the number 4 or the number 3 player as far as decorative paint sales are concerned. And that is the goal that we keep in mind. It's a tough market with large entrenched players. It's a huge market which with embedded high growth built into it. And we shall utilize that and continue to grow as we have been doing in the last 2 or 3 quarters, faster than the larger players. And I don't wish to give a time frame when we would become number 4 or number 3. But it would take a few years to achieve that, and that is what our focus is.
Current 38 to 40% revenue contribution that you garner from tier 1 and tier 2 markets, tell me what's the pie going to look like? Would there be a balanced focus on both tier 1 and tier 2 and the smaller cities? Or would the pie be higher or skewed in favor of one or the other?
I think if you look at the number 2 to number 2 and number 3 players at least, I believe that the pie is about 50-50 with regard to larger cities versus smaller towns. And that is the number that we are striving to achieve. It may take a couple of years to reach there, but that is clearly the focus area, to reach a 50-50 share between the larger towns and the smaller cities.
How do you really go about your distribution? Is it technology backed? Is it about much more wider reach across the country and even the bigger towns? What is your differentiating strategy as far as your distribution is concerned?
So the differentiating strategy is not so much with regard to distribution, it is with regard to product offerings. We get more than 30% of our top line revenue from products which are highly differentiated from others. And that is the catch, and that is the pull that dealers see in onboarding an Indigo paints into the retail outlet. When it comes to the larger cities, yes, network expansion is important. It is also important to increase throughput per dealer, which is in turn done by installing tinting machines there. Our tinting machine addition has been galloping forward at a much faster pace during the last 2 quarters compared to the earlier quarters, and a higher percentage of our tinting machines are getting installed in these bigger cities, and that is leading to a much higher throughput per dealer in those cities, and that is what is really driving our growth in these big towns.
Mr. Jalan, great to have you on the show today. Thank you so much for taking the time out, and happy Diwali from all of us here.
Thank you. Same to you.